Let's look at some stock ideas for tomorrow morning. Market conditions are not looking all that stable. So, Pranay, I would imagine that things, really, the majority is leaning on the sell side.
Yes, majority is leaning on the sell side. However, there's one stock that has continued to maintain a good story, and that is Zee Entertainment, where analysts continue to remain bullish as a result of the ratings improvement in its flagship channel, that is Zee Entertainment. Also, it has managed to gain market share in the third quarter as per agency reports, and this is likely to lift the ad revenues in the fourth quarter. Also, the phase 2 of digitization, which involves about 16 million set-top boxes to be installed versus 9.4 million in the phase 1, as per the Information and Broadcasting Ministry, which is up more than 75%. Zee Entertainment is likely to cash in on this digitization wave, and this will lead to high cash flows. So there is a possibility of higher dividend payout ratio coming in as a result of this. Next is ICICI Bank, which has continuously underperformed its banking peers and has seen a grind down post its results. One challenge that remains is that its credit deposit ratio is at 100%. So it needs to ramp up its deposit rate much faster than the credit. Now, the valuation multiples look unconvincing at this at current levels, which is at 1.8 times adjusted price to book value at FY14. So it is seeing strong delivery based selling, especially by large institutions, and the stock is currently trading at 12-week lows. So the underperformance is likely to continue.
Pranay, thanks a lot for that. Ashwini, what are your top ideas for tomorrow morning?
The first one is India Bulls Real Estate. That's a sell with a stop about 73, target of 62. Axis Bank is a sell with a stop about 1425, target of 1390. And Financial Technologies is a sell with a stop about 955, target of 910.
Pankaj, give us two medium-term investment ideas.
In terms of, I think ideas, one can look at Tech Mahindra, wherein we have a target price 1250. Currently, it is trading at 10 times. We believe that going forward, the defenses is the place where one should be. So, which is why IT in general has been doing well. At least in the last quarter, we have seen the tier 1s have done well. And the valuation gap between tier 1s and tier 2s is likely to be bridged. So, which is where we would expect the stock to do well. In addition to that, one can look at a stock like PNB, wherein the slippages have come down from above 5,000 crores per quarter to below 3,000 crores. And the stock is available at below book, so which we believe that going forward, from a longer term perspective, the stock can be looked at.
Sanjeev Prasad, as a house, you have underperformed rating on Reliance. So why is that? Optically, one would argue that Reliance has stabilized, and in the near term, the demand environment is rather constructive for RIL.
No, this is something which has been known for a long time. It's not something which is new. I mean, last 1 year, we have been anticipating some increase in gas production from fiscal 2016. But looking at the press release which came out yesterday, the new resources doesn't look like it's going to come into play before fiscal 2018. I mean, the press release says 2017. I assume it's calendar 2017, which effectively pushes us into fiscal 2018. So, unfortunately, it looks like there's somehow a delay compared to whatever expectations we have in terms of recovery and gas production from the satellite fields of the KG-D6 block. Other issues are pretty well known in Reliance. Refining margins are doing reasonably okay. Chemical margins, you're seeing some signs improvement, although still at a low level. Gas production in the short term is declining. We have already assumed $8 per million BTU gas price from 1st of April 2014. So all this is already there in the stock price. So the stock